Okay, Brent from TradingGuild.blogspot.com. I'm back, and we were looking at that stop channel on BDGA. And there's another way I also would consider stopping out, and that is if two of these indicators, any two of the three indicators, fall out of gear. In other words, the moving averages cross below each other, the custom cumulative crosses below its moving average, and RSI crosses below zero. Any two of those occur, and I would stop out on the trade. Otherwise, I'm using that stop channel. So here we go. We're going to just track the stock, and let's take a look at where the stop channel is. So right now, our stop is right here at the highest point. So we haven't got stopped out yet, and this is on a close, by the way, not on intraday moves. So let's just track this and see how far we go. Okay, we're current. So we had an entry somewhere around $29, and we have a price at about $35. So a 6-point gain, and that's not bad. I think about 20%. Also, you'll notice that none of the indicators have fallen out of gear yet. The moving averages haven't crossed. We still have a positive closes in this indicator, and RSI is above that zero level. So let's take a look at another one. And the next one is BKS. This is Barnes & Noble. And what I want to show you, we're going to just kind of scoot back a little bit here into August. And like I said before, I like these situations where the stock is trending down and we start to see some strength developing in it, like the MACD divergences that we're seeing here. And over here it's actually above that zero line on a new low. So we also see volume coming into the stock, and we see accumulation coming into the stock. So this is not going to be an industry laggard because Barnes & Noble is pretty much the industry leader. So it's not a laggard play. But let's take a look at that that screen. So now we're just going to look for the crossovers here. So let's scoot forward. Now there's price moving up, and at this point we have all three indicators in gear. RSI above zero, the crossover here, and the crossover here. So 35.12 is where we can go ahead and buy, and what I would do is buy a portion of the position at first, unless you get a good price on the crossover. But this is up 2%. So what I would do is buy a portion of it and then buy the first pullback to the 10-day moving average. So right here around 35.50, I would add to it the second half of that position, and basically we would just go ahead and throw this now. Originally when we entered it up here, I would, you got to use a little discretion here. I would because the stop channel is not going to be trending yet. It's based on moving averages, and we're making a turn in here. So I would maybe put my stop in this level. So we bought up here, our stop is below there. Once it starts trending like it is now, we can go ahead and switch over to that stop channel, and let's do that now. I'm going to zoom in, and remember, a cross below the lower line on a closing basis will stop us out. There's also a little bit of discretion used. If you see a huge down day in volume, or it starts to get negatively divergent, or you see distribution in indicators, then you'd go ahead and exit that on a discretionary basis. Now you see how, and this is the great thing about this stop channel, it took me a long time of tinkering to get it to do this, but I can ride out a sideways consolidation in a lot of stocks, and so long as it doesn't penetrate below that lower line, this is an open position, and good thing, because look, it's up 4.5% that day. So we'd just go ahead and let this run, and currently it's still running. So if we take a look at the screen, again, you can see all three indicators are still in gear. RSI is above that zero line, and the moving averages are where they should be. So let's take a look at one more just to get a better feel for this. NVDA. And with this one, we saw, again, this is a stock that I think is probably an industry leader and is not going to probably ever be an industry laggard. But here's again We're going to look for that positive bias, and here we see it in MACD, those divergences. We see volume starting to pick up on the upside, and at this point we're actually seeing a little bit of a base in here forming. We're not making newer lows at that point, so it's piquing our interest, and you can see accumulations picked up in BOP, TSVs heading up, money streams at leading divergence or relative divergence, actually both. And we just switch over to our screen, and we're going to look for the entry at this point, and here it is. So as you can see, we get the crossover here, the crossover here, and the crossover there. So at 26 or 2267, we enter half of the position, or maybe you want to do it a third, maybe you want to go all the way in. On the first pullback to the 10-day moving average at 2125, we enter the rest of the position, and the next day we're up 7.67%. At this point, I think I would consider the stock trending. So I would go ahead and switch over to that stop channel, which is down here around 20, and watch how that moves up every day. Well, now it's at 20. Now we're at about 21.75, 21, and it just keeps moving up, locking in profits, locking in profits. So if we just follow this up, we'll see how far we go. Okay, and we're stopped out right here on this day. So here's the highest level of the moving average. There's the close below that. So we're stopped out at 28.84. And if we take a look again at the moving averages, you can see RSI is getting ready to dip below that zero line. This blue indicator is starting to turn, and the 10-day moving average is also starting to turn. Let's see what happens there. Okay, we got another move up. You know, we don't know what's going to happen from here. What I would say is on a breakout above this level, you could re-enter this position. Now, you're going to get stopped out sometimes, and the next day, you know, you're going to be up 7%, and that's part of the game. You know, if you want to make money and you want to survive the market, forget about buying bottoms and selling tops. What we want to catch is this, everything here in the middle, and this system allows you to do that. Maybe I have time for one more. Actually, I have a couple more I want to show you, so maybe we'll do another video. Let's take a look at TNH. And TNH is a stock that was an industry laggard back in mid-August. And let me just go ahead and throw up the industry group. That's in red, and it's agricultural chemicals. And you can see what's going on here with the industry group. It is on an uptrend. It's making higher highs, higher lows, and this stock is just kind of headed down. But we see some things developing here, some volume in here, and even these little spikes are abnormal. They're above the normal levels, and those are little clues. Don't look, you know, everybody sees this. You know, we're looking at this and this. We're looking at the little clues. So we also see accumulation here in balance of power, even though, like I said, balance of power can contradict price, and it's doing so now. Money stream has not made a new low over here, so it's at a positive divergence. So now what we're doing is we're looking at a stock that is an industry laggard. There's the industry again, there's the stock. We'll switch over to that screen, and we're going to just wait for the crossover. And here it occurs. Well, maybe the next day, but we're just about ready to cross over there. RSI's up. We crossed over here, so we're around 2168, and we'll see what happens here. In this case, I would put my my stop probably down here at this level, because you know, there's going to be some support there, and you got to enter the stock right to allow yourself a large enough position or a large enough stop. So I'm going to be right back. We're going to finish up with TNH on another video.